Really, there's a lot less participation right now in the overall equity markets. And I think what you're really waiting, what the big banks and what everybody's waiting to see is to get some of the new money in from the small investors so they can tank the market. And I think that's what we're looking forward to.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for November 25th through December 2nd, 2024, while supplies last. First, we feature backdated 1-ounce silver Austrian Philharmonics at just $3.09 over spot per ounce. We also feature the limited edition 2024 1-ounce gold UK Lion and Eagle coin at just $99 over spot per ounce. And finally, 1/10 ounce gold Britannia are just $29.99 over melt per coin. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Todd Bubba Horwitz from Bubba Trading. Todd, thank you so much for joining us today.
It was great to be with you, Elijah. Always fun to be on your program.
Well, it's always great to have you. I did want to discuss, because I know we had you on before the election, and you were saying kind of regardless of what happens, you really are looking for the stock market to top out and for us to have potentially a pretty large crash. Now, today, as we record Wednesday, the 27th, the day before Thanksgiving, you mentioned how really there's some topping, the potentially topping patterns happening, or it looks like the stock market may be topping. So your perspective on that?
Well, I do think it is topping. And again, I had thought, as I said before the election, if Harris had won, I thought we'd just go down. If Trump had won, I thought there'd be a big rally, which we've now seen. But you're really seeing, it's hard to call it a bubble, but it is like a bubble. You're seeing a lot of valuations out of sight. You've got a middle class that is in a dramatic recession. You're having people in a lot of cities that are making over $150,000 a year that have to live paycheck to paycheck. So we're seeing a lot of disaster, and really there's a lot less participation right now in the overall equity markets. And I think what you're really waiting, what the big banks and what everybody's waiting to see is to get some of the new money in from the small investors so they can tank the market. And I think that's what we're looking forward to, because I think when you look at the bigger picture, you've had two Fed rate cuts since September 18th. On September 18th, the 10-year notes are 3.44%. Today, on November 26th, 7th, they are now almost 4.4%. So you are seeing a dramatic rate or hike in rates for the consumer, yet the banks are borrowing it less. So the banks are making more money, once again, allowing themselves to get into deep trouble. And I would say that, as you know, I don't believe the banks can support the loans they have out there now. I think they're well over leveraged. And this will be a problem when it finally shows up. It'll come out of nowhere, but it's really not out of nowhere, because if you're paying attention, everybody's over leveraged. There's too much credit out there. There's too much debt. And I'm talking about from the consumer. How's everybody going to support themselves the rest of the way?
So it seems like a bit of overconfidence there in the markets and for the banks as well.
Well, I mean, the banks, they don't care because they're in a no-lose situation. They're now making more money. I mean, they're making another full percent on the money they lend because the rates to the consumer have not come down, as I said. Mortgage rates have gone higher. So the bank's profit margin, if you understand the Federal Reserve and what they do, banks borrow money from the Fed funds, okay, at X, which is now whatever it is, 3-something%. And of course, they lend out, and their profit is made on the spread. Well, their spread has gotten bigger thanks to the Federal Reserve, which is only going to really create massive inflation. Because again, this is what I think this was the idea behind the cuts anyways, is to create inflation because you're paying more tax dollars. It is called the hidden tax of inflation for a reason. And so we're now paying more federal tax because we're paying more money for everything because inflation is on the rise once again.
Now, when it comes to the banks in particular, I know you've been very concerned about the stability of the banking system. We've seen, many bank closures over the, last year. But looking forward into the new administration, do you see any changes in that regard? Or it sounds like the banks are just making the same mistakes that they did in the past?
Well, they're always going to make the same mistakes. See, the big problem you have, Elijah, is that when they know that the Federal Reserve is going to bail them out because they're too big to fail, why not get over leverage? Why not make more money knowing that you really are making a risk-free trade? Now, I do believe that President Trump will put the hammer down on some of this stuff. He's a big borrower, and he understands every, one of the things I hate about him is that he understands every loophole that you can find, because of course there are loopholes in every system, and it's those who can find it that actually get the bigger money. But I do believe that he's going to come down on some of this stuff and try to shorten it up, because the only way you can really reduce the overall debt, only way you can really get the economy back in shape is to let some of these businesses that can't survive, let them go out of business and then rebuild. That is the true capitalistic system to begin with. When you're not good enough to stay in business, you go out of business and somebody new comes in to replace you.
No, when it comes to some of Trump's appointees, it's interesting with Scott Bessent, who's the Treasury Secretary appointee, almost surely is going to get approved by Congress. Your perspective on that appointment, because if you look at some of Scott's recent interviews on, for example, Real Vision, he talks very positively about gold. He even has talked about gold being his biggest position right now. So do you see that impacting policy in any way?
Well, listen, we should be on the gold standard. The fiat currency system is a manipulated, fraudulent system to begin with, right? Because there's no backing to any currency throughout the globe. So if we would go back to a gold standard, and I think that you would have real dollars, and you would have a real understanding of what was really happening. And this is what I like about him. And of course, you've also seen the dramatic rise in Bitcoin, because I believe that Trump believes in a free market system as well. And of course, the Bitcoin is the true definition of capitalism and price discovery and free markets working. And I think that's what Bessent believes as well, is that if you let the free markets work, asset classes will price themselves. When you manipulate the money supply, and when you have a faulty or a false a currency system that is really just built on error, you're going to you cannot really get a good grasp. And you can never get out of debt when you continue to create new money to satisfy all debt. All the governments are really doing, the central banks are doing, is running a massive Ponzi scheme. And that's what we have to get out of. And I think that's what he's saying, is that he wants to eliminate the Ponzi scheme that government and Federal Reserves and central banks around the globe have created.
We had a commenter in the YouTube comments, and one of the things they said, I think, was actually pretty insightful. We had Alan Greenspan, was a gold bug before he became Federal Reserve Chairman. So do you have hopes for this new appointment, or do you think, it'll just be business as usual, even with him in there?
I don't think it's in business as usual. Again, obviously, you've got to fight through a lot of garbage and a lot of red tape. He's only got 4 years. The good news is that Trump has 4 years with no reelection coming. So he's not going to be campaigning halfway through for the next election. He's got these 4 years to do what he wants to get done. And I think there's a chance we can get some of these things done. How much, I'm not sure. But I do think that there's a real chance. And I don't understand a lot of the people complaining about some of his appointments. I mean, if we look at the damage that's been done to this country over the last 50 years, okay, using the same old garbage appointments that we've used. It's like in sports, they keep hiring and retrading the same old coaches over and over again that can't win at once. How are they going to win again? So I'd like to see some of the innovations, some of the new ideas that we're seeing out of the Republican Party and out of Donald Trump, because I do think that we have to change something. We cannot continue to get deeper and deeper in the hole and deeper in debt. And I think the tariffs part of it and everything that he's doing lends right into what Bessent wants to do.
And then, so how do you see this impacting the precious metal markets, if at all? I mean, obviously, the first trading day after Bessent was announced as the nominee, we saw gold take quite a bit of a hit. So do you see this being bullish or bearish for gold?
I think it's very bullish for gold. Look, gold was straight up. You and I talked, I don't know, a month or so ago, and I said gold was going to 2,800, right? And it did go to 2,800. You're going to get some selling. Markets don't go straight up or straight down, especially commodity markets, and gold is a commodity. Say what you will, it is a hard asset commodity, okay? And it's not going out of business. You had a massive run up, and then you had a slight pullback. there was no question that there's an opportunity to go back to the 2,600 level. Or right now we're trading just over 2,600. Again, I wouldn't be surprised if it went back to 2,500. It wouldn't worry me one bit. It would just be another buying opportunity. Gold's up 30% this year. So if it's going to continue to go higher, but I think there's always got to be some pullback into that. So the sell-off happened to be a coincidence. We always like to blame things on one particular item, but gold was already well overbought going into that. And in fact, from a paper standpoint, I was short gold into that sell-off. So I was very happy about the sell-off. Again, you have to understand markets and how they function. Long-term, I love gold. Long-term, I would say that by the first quarter, I would say we'd be over 3,000 next year. I would say silver is going to be close to 40 next year. But again, you're going to have some times when markets get sold off and we want to blame it on something, just like every crash in history. It's always been blamed on like one particular day. Well, those things were building up long before the actual crash happened. And the same thing in gold. Gold rallied. It couldn't be stopped. And all of a sudden, some of the people decided to take some profit and they pushed it down. And now we're seeing a little bit of a bounce. And again, we go into this dollar situation. The dollar's been very strong. Okay. And of course, well, the dollar was getting stronger, so was gold. A lot of people don't think that's the right relationship. But it's not the true correlation, but it would be the honest correlation. Gold can go higher along with the dollar if everything is right and we're not playing with monopoly.
No, when you say we're not playing with monopoly money, what kind of changes do you see in that area and how do you see them impacting gold?
Well, I think that there's a chance we could be, you see Texas already, a state is talking about using more gold. And I think you're seeing a lot of these things, a lot of the sentiment throughout the politics and then throughout the countries, and the states. And I think that finally people are getting fed up. This massive amount of debt, even the massive amount of debt that they let the individuals get into. Okay. That's all because you're dealing with nothing. You're dealing with something that really doesn't exist. Paper money is not worth the paper it's printed on, basically. It's just a way of kind of keeping score. But at the end, if they can reduce this debt and start to work on it, and the only way they can do that is by having an actual net value of what the dollar is actually worth or what the euro is actually, whatever anything is actually worth has to have a actual value underneath. Otherwise, you can keep pumping up the money supply and kicking the can down the road, running that Ponzi scheme in which they're running in more than one area in the United States government right now.
Now, when it comes to the other markets, we started off this interview talking about the stock market. If we do look into the end of the year and next year, can you kind of walk us through how cautious should people be? Because as you mentioned, it seems like it might be topping out around now. So how should people be positioning themselves in your view?
This is a personal question for everybody. It depends on your standing, your capital, how much money do you have. Certainly, you should never invest dollars. If you have credit card debt, you should not be investing in any market. Okay, you should have your credit card debt because you're paying a hell of a lot more money on your credit card debt than you're ever going to make in an investment. Okay, but everything depends on your time frame and what you're thinking you want to do. If you've got extra capital right now, even though I think the market's topping, listen, I'm 100% in the stock market right now. Okay, and I do think the market's going to collapse, but I'm also hedged. So learning how to hedge is part of something that you may want to do as well if you want to continue to invest. There's a lot of ways to do things, okay? But right now, if I were looking, I'd be looking for some stuff that might have already taken its hit and that has become maybe undervalued. Now, again, you cannot invest expecting to make money tomorrow. When you're investing, you're trying to play the market statistic that the markets go up 8.5% year over year, okay? Not what's going to happen over the next 6 months. I think this year, the rest of the year, I think we probably rally. It's fourth quarter is typically bullish. I can only remember one Black Christmas of 2018 that was not a bullish fourth quarter. And you do have some buyers coming in, but I would say probably in the first quarter of next year, I would expect to see some selling coming into this market because people are going to start to realize we don't have good jobs. We don't have any money. We've got massive debt. Credit card bills are coming due. It's Christmas now, which means that people are going to add more debt because nobody lets their kids suffer for Christmas. So I think probably looking into the first quarter, I would expect to start to see some selling. And again, it's going to take what's going to trigger the real panic will be almost like what Paulson did in September of 2008, saying that the banks were safe and sound when they really were not. And then all of a sudden the markets fell apart. Something like that's going to happen again. We're going to get the reassurance that our job is safe as a coach, and then we're going to get fired. And I think that's what will happen in the markets. And I think it won't announce itself, but there'll be plenty of warning signs like there are now. Lack of jobs. You've seen the jobs reports over the last couple of months. The massive amount of debt that individuals have. Forget about government debt. The massive amount of debt that individuals have, because we've never had this many people at full limit on their credit card in history.
It is a frightening scenario that we do see for the American people. It seems like this is probably one of the main reasons why Trump was elected. As you mentioned, right before the 2008 crash, officials saying everything is perfectly fine. I think before the election, everyone was saying, look at the economic numbers. We're perfectly fine. We're doing great. And it's like the average person is not. So it seems like, the American people have put their foot forward or put their foot down and said, no, the economy is not doing well. And it sounds like even though they may have hopes for this new administration, it might be we might be too far down the road to really turn this around.
Well, we can turn it around, and we have, but before you can turn it around, it's like, first you have to admit you have a problem. And I believe that Donald Trump has made it clear there is problems, right? So once you admit you have a problem, you can start to go into solve. And I think that if you look at the Ramaswamy, Elon Musk deal of trying to cut $2 trillion from the debt, that's a start. I think, the tariffs are another start. I know everybody's all afraid of the tariffs, but if you remember last time we had tariffs, there wasn't a problem, okay? The deportation of the illegal immigrants, because those are a lot of tax dollars that we are paying as taxpayers. We're paying for those people, okay? I mean, these sanctuary cities. So once you start to pick off those problems, and if you can get on the right track, okay, that's why people voted for Trump. It's unbelievable that he actually won the popular vote by such a large margin as well, because people finally got fed up with giving all their money away for nothing, versus now at least people have hope that we can get into a new model and go back to what the United States used to be, because we've been going through this. It doesn't matter whether you're a Republican or a Democrat. Both parties have systematically destroyed the system by kicking the can down the road and destroying the free market system. I think President Trump wants to bring back the true free market system, which brings us to Bissett and brings us to what he's trying to do with the debt, because then you can get back into a free market system.
Now, last question before we let you go. When it comes to de-dollarization, we see that happening around the world, the BRICS nations seeming to move more towards gold. Your perspective, how this appointment will impact that, if at all?
It won't affect it at all. In fact, again, we can talk about this, but just look at what the dollar has done since the BRICS nations announced that they weren't going to use the dollar anymore. The dollar has gone up about 10% since that announcement. We were back down close to par when all that came out. Now we're right now trading in the dollar at about $1.07, I think, $1.06 right now. Okay, so we're up 6 cents per dollar. The euro currency, the other currencies have gotten slaughtered. This BRICS, again, a few small nations, whatever. At the end of the day, the dollar is the reserve currency. The dollar is what rules the world. The United States is still the superpower that we are. And if with Trump back in office, I think we regain that momentum, and that takes away a lot of this ill feeling up towards the dollar. But for 20 years, I've heard that the dollar is not going to be the reserve currency. Well, 20 years later, it is still the reserve currency, and I don't see that changing anytime soon.
So you think China and Russia are small nations?
Well, I think China is, they're both communist countries that don't allow the free market. So in size of people, what people can do, they are small. They're huge in numbers, but small in actual people that can actually have an effect change there. Okay. United States, you have somewhat of a free market, right? You have somewhat of, not quite socialism yet. We're still kind of in that capitalistic area, but more people in the United States can affect change than can in China and in Russia. So in that respect, they are small nations. Yes, they're very big, but they're ruled, not governed.
One aspect of de-dollarization, right, is that it's if the countries can get away with it, but with Trump in charge, the art of the deal, right? The man of the art of the deal. Maybe that won't happen.
Let's face one fact, Elijah. The United States, we could be an island. We don't need anybody. we don't need to be within any country. We could wall off the entire country and be an island and survive better than anybody. We are more equipped. We are more prepared. We have more of a system that would allow that to happen. So you've noticed already that there are things happening, even in the Russia-Ukraine war. There's talks of peace talks. You've seen some of the things happening now in the Mideast. And that's only since Trump's been in office. He's not even in office yet. He's still just the nominee, just the elected. So again, when he takes over, if he lets the system work and goes back to what the free market does, then none of this makes anything. What China, listen, we know China has a 100-year plan to take over. And Biden helped them accelerate that plan to maybe make it in 50. But now Trump's back in power, and his people are going to go, and with the tariffs, with everything else, with what he's trying to do, I think he puts his stamp on this administration. I think he puts a stamp on the country. And I think we go back to more of a free market system, and then the rest of it puts us back in the driver's seat. And we bring our inflation down, which makes Americans more prosperous, because, of course, I think that crude oil is going to come much lower because we're going to drill, baby, drill. And, of course, that is 80% of our economy. It has an effect because of your own driving, goods and services we buy, getting these deliveries. So everything comes down, brings inflation down, makes the Americans more prosperous once again.
All right. Well, it's Bubba Trading. We have an affiliate link in the description of this video here. Thank you so much for your time today, Bubba. Can you tell us a bit about Bubba Trading?
Sure. Thanks, Elijah. Yeah, Bubba Trading, we're an educational outfit. I trade live every day with members. I teach how to hedge, which is one of the big products that we like to deal with because, of course, you can be 100% invested. But check out BubbaTrading.com and you'll see what we can do for you. And certainly you can email me anytime you want at Bubba@BubbaTrading.com. Be happy to answer any of your questions.
Fantastic. We really appreciate your time as always today, Bubba. Thank you so much, and God bless. Happy Thanksgiving.
Thanks, Elijah. Happy Thanksgiving to you and to everybody else.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for November 25th through December 2nd, 2024, while supplies last. First, we feature backdated 1-ounce silver Austrian Philharmonics at just $3.09 over spot per ounce. We also feature the limited edition 2024 1-ounce gold UK Lion and Eagle coin at just $99 over spot per ounce. And finally, 1/10 ounce gold Britannia are just $29.99 over melt per coin. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.